Good morning, everyone. This is Samantha Carvalho. I'm the Director of the Office of Community Housing for the Housing Finance Division of the Georgia Department of Community Affairs. This is a webinar for the Community Home Investment Program, or CHIP, 2020 grant application. What we're going to do today is go over the CHIP program itself. I'm going to do a few slides on DCA and then a little bit about the CHIP program. And then we're going to dive into the 2020 application. I'll go over the changes from last year's application, an overview of the application step by step through each section of the application, how those application sections will be scored, and then how you can submit it to DCA. And right now, though, I want to go over a couple of housekeeping items. On your display, you'll see a question box. So as we go along through the presentation, if you think of a question you'd like to ask, please put it in the box, and then I'll pause throughout the presentation to answer those questions as we go. And we will also post the questions and clarifications, if necessary, on the website after this. This webinar is being recorded, and so if you want to share this with your colleagues after you watch it, this will be up on our website as soon as we can get it up there. So first of all, the Georgia Department of Community Affairs has 65 different programs. We have a staff of over 400 people. We manage $270 million in federal and state funds. And we provide services in affordable housing, community development, economic development, and planning. And this program is one of our affordable housing programs. For our affordable housing activities, we use those federal and state funds to provide new construction or reconstruction of multifamily rental developments. We build single-family homes to sell to income-eligible home buyers. We provide owner-occupied home repair assistance. That's handled through the CHIP program that we'll be covering today. We also provide housing counseling and consult with firms that want to develop housing counseling programs. We provide down payment assistance through our Georgia Dream program for home buyers around the state. We provide the Section 8 rental assistance program, and we have a number of different programs for homeless people and homeless people with AIDS and HIV to provide them shelter beds and services. So what is the CHIP program? CHIP stands for the Community Home Investment Program. It is funded with federal HUD home funds. The state of Georgia receives around $20 million in home funds every year, and we use about a quarter of that to fund this program. The other 75% or so that we fund every year goes into our multifamily rental development programs that we match with the Low-Income Housing Tax Credit Program. And I would be happy to talk to you at another date about what that program entails. What we are required to do through the federal program is to assist homeowners and home buyers who make less than 80% of the average median income for their county. This is not a direct beneficiary program. In other words, homeowners in need of rehab assistance or home buyers looking to buy a house that we're building, they don't contact DCA directly. We contract with local governments, nonprofits, and public housing authorities every year through this grant program, and then they assist people within their community. However, if somebody wants to know if there is a program in their community that can help them, they're welcome to call our number, and then we'll either refer them to an active CHIP program or we'll refer them to other resources that may be able to help them. We average about 10 to 15 grants per year through this competitive grant process. We range in amounts from as low as $3 million to as high as $7 million in the funds every year. Since 2009, we've provided 161 grants to local governments, nonprofits, and public housing authorities for a total of over $55 million. To cover where we were last year, we made an award of, the total amount was $6,859,000 to 22 grantees, of which 14 were cities, 3 were counties, 3 were nonprofits, and 2 were public housing authorities. And with that, our awardees are committed to building or renovating 140 houses. So they have the targeted goal of renovating 120 owner-occupied homes and building 20 new homes for home buyers who are income eligible to purchase them. And then the average cost across all the programs or all of the houses is less than $50,000 per household. We provided 4 awards for new construction, and the remaining awards were for housing rehab. And I'm going to go over these award categories when I go through the application for you. So for the owner-occupied rehab activity, this is a really good example of what we would normally do. We provide grantees of $300,000 for their total grant, and then they can use that to assist a number of houses. This one was rehabilitated in Sylvester by the Southwest Georgia Regional Commission. For the single-family housing development activity, we provide $600,000 to develop housing for eligible home buyers. This is an example of a redevelopment effort that combined home funds through the CHIP program, CDBG funds, and other resources to develop a neighborhood on Rusher Street in Washington, Georgia. So the DCA's overall goals for the CHIP program, in addition to the federal requirement of serving people who are low income, is to locate our funds in communities that show that they have a high capacity to carry out the activity, that there is a justified need for the housing activity, whether that's owner-occupied rehab or the need for new affordable housing, and that they are combining our CHIP funds with a greater effort that is involving redevelopment or assisting low-income neighborhoods through their planning efforts. Our goal for the 2020 round is to award $3 million in home funds. We aim to provide 4 awards in the owner-occupied housing rehabilitation activity and 3 awards in new construction. And so now I'm going to take a break for questions from you, but I can see in the question box that nobody's asked anything. Like I said, feel free to put your questions as we go along. So now we're going to get into the application itself. All the application information is on our website. We're releasing an update later today or tomorrow after this webinar to clear up anything that might come up during the webinar. And also, we have gotten notification from some people, and I thank you all very much for looking at this already, that there are some typos and things that need to be clarified in the version that we posted on the 4th. So we're updating that, and then we'll update anything else that needs clarification after this webinar, and then publicize that for the public to know that there is a new version. Some of the issues that were incorrect in the original posting, I'll clarify throughout this application. The application was released on the 4th. It's due back on January 31st. That is about 5 months from the release date, and we are extending that time period, and I'll explain to you why in just a little bit. We also have on our website the CHIP Administration Manual. Oh, and by the way, this PowerPoint presentation has links, and I put the presentation on your in your webinar information. So you can download this and you can access these links, or you can Google this or look for it by searching our website. But I would recommend reading the admin manual because I won't be covering all of the aspects of what is involved in the CHIP program in this application. This is just about the application. But if you're not familiar with the program, it would be nice for you to understand what kind of paperwork would be involved and the expectations that we have for our grantees. So a couple of changes from 2019. I understand if some of you have not participated in the 2019 round, but for those of you who have, there are 3 main changes that we've made, mostly to manage some new requirements from HUD. The first one is procurement. This is why we have a 5-month application period. In the past, we've done a 3-month application period. We want to give grantees, applicants, enough time to procure their grant administrator who will be writing the grant and who will ultimately be managing the program after we are awarding you funds. There is a number of resources in the application manual that will help you with this procurement process, a lot of step-by-step instructions and sample documents for you. With the hopes that with extending the grant time for applying an extra 2 months, that will give everyone enough time to go through the proper procurement required and be able to submit your application in time. The second change is HUD has required that any HUD-funded programs for home ownership must have a HUD certified housing counseling component in it. And the deadline is August of 2020. This means that in the past, we have required that home buyers go through some kind of housing counseling before they purchase their home so that they can understand everything they're getting into. And now we are requiring, because HUD is requiring it, that those housing counseling agencies are HUD certified. So if you have trouble finding a HUD certified housing counseling provider in your community, please let us know and we'll try to find somebody who will be able to help you. We also are able to use the HUD online counseling. If there is no provider in your area that is accessible for your home buyers, then online training is okay, but it isn't preferred. We think the face-to-face gives people more information to help them make the right decisions when they become a home buyer. And then the third change is that in order to meet some of our requirements when we're expending funds with HUD, we have decided to change the way we do our contracts. The CHIP grant term is 2 years, and in our contracts, we are requiring that our grantees meet certain benchmarks within the first 12 months. We think those benchmarks are very achievable and will enable us to be able to expend all your grant funding, hopefully by the end of the 2-year grant period for the grant. And that will help us meet our HUD requirements for committing and expending these funds. Eligible applicants for this are city and county governments that are not participating jurisdictions. That's what PJ stands for. Participating jurisdictions is the name for HUD home block grant recipients. So in other words, the state of Georgia is a home block grant recipient, and so are 12 different communities around the state, mostly the larger metro areas, and I'll have a list in the next slide. Eligible applicants are also public housing authorities or nonprofits with a 501c3 or C4 designation. Ineligible applicants, in addition to not being participating jurisdiction governments, although I should say nonprofits and public housing authorities within those PJ jurisdictions are eligible to apply. Ineligible applicants would be current grantees that have more than 50% in unspent funds in their CHIP grants that they already have been awarded by the deadline of this application, which is January 31st of 2020. And of course, the city and county home participating jurisdictions. These are those jurisdictions, so I'll give you a chance to take a look at these. They're mostly the metro areas in the cities and counties around the state. So for the owner-occupied housing rehabilitation activity, we are offering $300,000 for this. We expect that this will provide up to $50,000 per home for the home repairs. The reason why this might seem high to some of you is that the home regulations require that we address all the code issues within the home and that we do lead testing and abatement for lead-based paint issues if the house is older than 1978 and if the lead issues are part of the overall home repair work plan. It is okay to go over that amount if necessary for some homes, and we just need to make sure that we communicate that with one another and you get permission from us to do so. In addition to the money for hard and soft costs for the home repairs per home, we also allow up to $4,000 per home for project delivery costs for the grantee to cover all of your admin expenses related to these projects with all the paperwork that you file with us. The way this program is set up, while we are giving the local governments, nonprofits, and PHA grantees a grant, the homeowners themselves have a lien on their property for the amount of their home repair, and that lien is forgivable each year for 5 years. It can be 10 years if we do a complete reconstruction of the house. It's zero interest, and if the homeowner sells within that 5-year time period, they may owe back a portion of the amount that we provided to rehab that house. But as long as they stay for the full 5 years, they don't owe any money to the state. And in fact, if they do sell during that time period and they don't earn any net proceeds from that sale, they also will not owe any money back to the state. For the single-family development grants, we offer up to $600,000 for housing construction. 5% of the construction cost can go to the grantee for the project delivery admin expenses, up to 15% or up to $20,000 for the developer for their development fee. And we will reduce the price of from the appraised price of the house to the sale price by up to $15,000 to provide a home buyer subsidy, and that is secured with a 5-year lien. And I don't want to go into the details about how we do the affordability periods for the single-family grants, but I'd be happy to cover that with you at a later date if you need some more information about this. Just know that we do provide a home buyer subsidy. It's built into the pricing of the house, not as a direct down payment assistance that the buyer would take as cash to the closing, and we secure that with a lien, just like we do with the owner-occupied repairs. Whatever proceeds the grantee receives from the sale of the house, they can recycle it into more affordable housing activities. What HUD calls this is program income, and rather than return it to us, we let the grantees use it for additional affordable housing activities. So in other words, if you put $100,000 into a house, for example, and then you earn $50,000 off of that, you could take that $50,000 and put it into a separate account, and then as you accumulate that program income, be able to reinvest that into an additional house for sale or another home eligible activity such as owner-occupied repair or down payment assistance. And we would work with you to develop what your plan would be for that program income to make sure it meets all the HUD requirements, and it just provides an added benefit to your community beyond this initial grant. The other thing that I should mention about this to help you with your plans for this grant is that HUD requires that if the houses are once the house is completed and you have the certificate of occupancy, you must sell that house to an eligible home buyer within 9 months of construction, or else the home needs to be rented out. So what we try to do is work with grantees to do a lot of the upfront planning so that they're not put in this position where they have to deal with a 9-month compliance period to convert to rental. So with that, I'm going to take a break here. I see that we have some questions, so let me go ahead and answer these for you. Okay, so one question that we received says, you say the goal is $3 million for 2020, but you said you may get $3 to $7 million. When will you know the actual amount you will award? Well, that's a really good question. So our goal is to set the expectation that we will award $3 million. When we'll know the actual amount will be once we're reviewing the applications and we see where they score. We have the flexibility to award between 3 and 7 per year. Last year, we awarded almost at that higher level of $7 million, which is why we're taking a step back and reducing the amount this year to help catch up on some funds that we already have in the state for these activities. But if we determine that there are some really great applications that exceed that $3 million mark, then we can fund more. But I will say that our goal this year is to do a smaller award, fewer grantees than we have done in the last year. And then the other question I received is, please clarify that the applicant is only able to apply for either rehab or new construction activities. Well, I'm glad you're asking that because I think I have that coming up in one of the future slides. It is true that we have 2 different application forms. One is for the activity of owner-occupied rehab. The other is for the activity of new construction or reconstruction of existing homes to sell to home buyers. So the distinction is you're either assisting a home buyer who's already in their house with their home repairs, or you're providing a new home that's affordable for a new low-income home buyer. And we have 2 application forms, and while you can apply for both programs, we are only going to select to fund you on one of those programs. And then I have another question that came in. Let's see. I am wanting to do a nonprofit organization to allow me the opportunity to apply for these grants to help with communities with rehab, homes, or new construction. Is there a requirement for how long the nonprofit must be established? So that you do have to be an existing 501c3. We don't have a rule about how long the nonprofit needs to have been in place before you apply. And then the other question I received is the $14,999 is the $14,999 homebuyer subsidy set, or can it be reduced if the housing construction cost is more or less than expected? So this presentation doesn't go into all of the details. The policy is that we want to provide the $14,999, and the reason why the number looks like this is because, according to HUD regulations, when you provide less than $15,000, you only have to obligate the home buyer to a 5-year affordability period. Once you go to $15,000 and it's between $15,000 and $40,000 worth of subsidy, then the home buyer has an obligation of a 10-year affordability period. So if we were to decide to provide a bigger subsidy, then the person's lien for that amount would be longer. And then, in fact, there are two other additional lien amounts. One would be 15 years for over $40,000, and then for rental assistance, which doesn't touch this program, it would be 20 years minimum. And so the homebuyer subsidy, when we evaluate the underwriting for this project, it may be less than this $14,999. It may be more if it makes more sense for the buyer to go with a longer affordability period. It's just going to be a case by case, but the guidelines that we're setting are to try to set the expectation that you're going to be providing around this $15,000 homebuyer subsidy, or less if the person doesn't need that much. Okay, now I got another question here that says, okay, hold on just a second. Can you provide a lower subsidy, which I think I just answered. The $14,999 is a reduction of the cost of the home, not the funds provided for the grant to reduce the cost of the house, correct? Okay, let me read that over again. The question's asking the reduction of the cost of the home. Yes, so what we're doing here is you get an appraisal for the value of the house, and then you set the sale price to an affordable amount. The difference between the appraised value and the sale price is the home buyer subsidy. It means the home buyer walks into that house with equity that if they sell it the very next day at the appraised value, they would be able to get. And so we are reducing the amount from, it's not cash to the buyer to take to the closing, and it's just it's a subsidy to reduce the amount from the appraised value to the amount that the home buyer can afford, the sale price. Okay, now I have another question. Can mobile home owners benefit from this program? Yes, they can. We have, when we set up your contract, we have some special rules for assisting homeowners of modular homes, mobile homes, and we can talk about that at another time if that's where you want to orient us. We typically do these grants for stick-built homes, for homes on foundations that are not mobile homes, but we can assist people in mobile homes, especially in those communities where there are more of those homes for people in need of home repairs. Okay, so I'm going to take a break from taking questions right now, but please feel free to ask as we go along. And I'm going to move on to the next section of the presentation. Okay, so to answer a previous question about the application, we have two application forms, as I said. Applicants can apply for both, but only one will be selected. And you will be submitting your application form with attachments that I will go over by email. We're going to move on to scoring each of the sections now. We have added an application self-score sheet to the application so that you can score yourself to see where you are, and then while we're scoring you, we can see how our score, whether it matches or is different from yours, and help us hone in on things that there might be discrepancies so we can follow up with you to get clarification if we need to. Most of the points are in capacity. Then the next category is the need for this activity in your community. The next category is planning, how well you have are incorporating these funds into other affordable housing planning in your community, whether you are providing matched resources to contribute to this program, for a total of 80 points. So now we're going to go over each section, section by section. The first section doesn't have a scoring component, it's just general information. You're going to give us your contact information, what the activities you're applying for, and what your budget amount will be. A couple of tips here. Please be sure to list the appropriate people that can answer questions for us. And if you are wanting to connect with a grant administrator who has experience with CHIP or who has experience with CDBG or any other of housing programs either managed through the state or other resources, we would be happy to try to help you find someone that could work in your community. So the first scoring category is for capacity, and that's two sections. One is project experience by the grantee. So your city, state, nonprofit, or public housing authorities experience with either owner-occupied repair or single-family construction. We're asking you to attach a narrative. You'll receive the full 20 points if your narrative shows that your projects have been on time, on budget, and met your performance objectives. The second part of the capacity section is staff experience. This would be the grant administrators themselves, whether that's your in-house staff or regional commission staff or somebody that you've hired to administrate your program for you. Like I said earlier, you will need to provide information about them, their resumes, how you procured them to meet our procurement requirement. You will receive the most points, 10 points, for grant administrators that have over 5 years of administrating CHIP experience. If they don't have the CHIP experience, but they have other housing grant administration experience, you can receive up to 6 points for over 5 years of experience, and fewer points for less years of experience in either category. New to the 2020 application is 5 points for those grant administrators who are currently administering CHIP grants, and if they were able to draw down all of their funds from their 2016 and 2017 CHIP grants by the deadline of this application, which is January 31st of 2020. Now, I want to point out a note for clarification here. A lot of times we'll give an award for $300,000 for owner-occupied rehab, and for 6 houses, let's say, at $50,000 per home. But some of those houses end up not needing as much money, so you end up with a balance at the end. But you've built out all 6 houses. We don't want that to count against you if you're in that situation. So we'll work with you to de-obligate any remaining balance of funds that you have in these grants so that you can get these 5 points if this is the place where you are with those grants. We do have open 2018 and 2019 grants, and we are not going to be, the points will not count for those because the 2018 grants are still within their 2-year period, and the 2019 grants have just started, so we have no expectation that those would be closed out by now. The next section is the needs section, and this is where we want you to tell us why there is a need in your communities for these 2 activities. So we're asking you to send us the target area for your application. Where are you going to be advertising for the people you're assisting, or where you're going to be building the new homes? We have a couple of points for geographic prioritization. So if a community has not received CHIP funds in previous years, you'll get points for that. We have an appendix that lists all of the applicants, all of the grantees, that we've had since over the last 10 years. So you know whether your community has been served. And we are providing a point for those communities that have been in the FEMA federally declared disaster areas. And a point of clarification here that we need to do on the application that we sent out is that this declaration needs to be for FEMA's individual assistance to homeowners themselves. When Irma came through, the entire state of Georgia was under a federal declared disaster area, but only a few of those communities receive the FEMA individual assistance for homeowners, and that's what we're looking for. The last part of the needs section is poverty rate. New to this application from last year too, we developed a mapping tool for you to use so you can find your community on the mapping tool and find what the poverty rate is on the map and put that in the application. Hopefully this will make it easy for you. We also, in the application, offer an opportunity for you to provide additional information if you feel that the poverty rate map is too broad. In a lot of communities, the rate is based on population, and you might have people representative in that area who are very wealthy and low income, and then it averages out. So there is an opportunity for you in the application to provide more information if you feel like this tool doesn't represent your area the way you want it to be represented, and you'll have to justify that for us so we can use it. We want to prioritize our owner-occupied rehab funds to communities that have higher poverty rates, so you'll receive more points for that. And we want to prioritize our construction of affordable homes in communities that don't have affordable housing or are in a higher income areas that may have more opportunities for better schools and more jobs. So we are prioritizing more points for those lower poverty rates for the new construction activity. This is a picture of our mapping tool. You can find it on the DCA website. And what I've done here is I have looked at just the poverty rate. So if you look at this picture, on the left-hand column, it'll show you check boxes where you can check either city or county for total population, percent change, poverty, median income, et cetera, et cetera. It goes down all the way through a number of different housing data sources. And so I've highlighted just the counties and just the poverty rate, so you can see what it looks like when you select it. And then you can also select your community for all of these data points. It'll pop up in the window. So you see here where I have just selected Wilkerson County because it's just in the middle of the state, and the pop-up window will show you all of those. So to talk about need again, that there's the section for each of the applications. This is the one place where the applications are different. So for section D, for owner-occupied rehabs, we're asking you to attach a narrative with photos of multiple homes in your target area to give us a sense of the need for owner-occupied rehab there. And for the new construction, reconstruction of homes for sale application, we have a section where we ask specific questions to determine the market for new construction in your area. So just talking about the owner-occupied rehab application right now, for the current housing conditions, what we're asking is there a need for owner-occupied home repair in your target area? So we're asking you to do a narrative and multiple representative photos of houses in the area, so we can get a sense of the kind of neighborhood you'll be working in and what kind of repairs are needed. I should also say that this is also helpful for us to identify neighborhoods that may have a lot of historic preservation requirements. So if you're taking pictures of a neighborhood that is clearly a historic neighborhood, that gives us a sense of the kind of cost we may be dealing with the home repairs to help the houses meet the historic standards. So that's another reason why it's nice to see the photos when you apply. That wouldn't count one way or the other with your points, but does give us an indication of the kind of neighborhood you're working in. For the single family construction application, for the real estate market analysis, we would like you to use the map tool again and select from 3 different categories on the map tool. So we're going to give points for communities that have a low vacancy rate, for communities that have high home prices, which would be an indication that the medium home values are unaffordable, and for communities where the population is growing and there might be a need for more housing in the area. And then the last thing, which isn't part of the mapping tool, is a narrative about the neighborhood itself, what kind of amenities are available to people who live in that neighborhood where you'll be putting the houses. So I'm going to take a break now for questions again. Let me see where we are here. Let's see. Okay, so for the 2020 application, is there a requirement to have an experienced grant administrator. I wouldn't say it's a requirement to have an experienced grant administrator, but the points will be, you'll receive more points if you do have experience. And I think that's the only question that we've gotten so far in this section, but feel free to continue to ask questions as we go along. Okay, so moving on to the next section, planning. We have two parts to this. One is participation in the Georgia Initiative for Community Housing Program, or GIC, and this is just a screenshot of the GIC website. This is a program that is a partnership between the University of Georgia, the Georgia Department of Community Affairs, and the Georgia Municipal Association. And it is a program where communities will create a housing team, they'll apply, and if they're accepted, they accept 5 communities per year to participate in a 3-year planning process. You attend 2 retreats per year. One is 2 days, one is 3 days, and you meet intensively with your team and a facilitator to develop a housing plan. And in between your facilitation sessions, you will also hear presentations by other communities that have had some successes in implementing housing planning, whether that's code enforcement, setting up land bank authorities, a number of other things that you may be interested in also doing in your communities, and experts that can talk about different things to put in your plan. We have a number of communities around the state that are alumni, and we have about 15 active GICs that are currently within the program that are either in their first year, second year, or third year of the program. So this is a link to the website, and the GIC section of this application can give you up to 5 points, depending on the answers to those questions. The second planning part is for you to submit your affordable housing plan. And we don't give guidance necessarily about a specific type of plan, like whether it is your comprehensive community plan or what have you, because we know different communities have different plans. All we ask is that whatever plan you submit meets these criteria, at least some of them. You get 10 points total if you meet all the criteria. That the plan has been adopted by your local government, that it had a public input component to it, that's less than 4 years old, that the target area that you are submitting in your application is represented in your plan, and that your goals, for example, owner-occupied rehab, are in your plan. Okay, so for now, I'm gonna take a second to answer any more questions. Would experience with home funds count? So I think this question is, would grant experience with home funds count? Yes, they would count, as long as the home funds are for one of the activities that the activity that you're applying for. So for instance, if you have home experience from another community or another state, that would be really helpful, because it would mean that you understand the home program, which is part of the complexity of this activity, is that it's federally funded and it comes with a lot of federal requirements. So if you understand what is required within the home program, then that will enable us to feel confident that you may have the capacity to do this program too. Okay, so I'm going to move on to the next one. Okay. So another component to the scoring is match points. So how much are you bringing to the table in addition to this grant funds to do this program? You can receive up to 10 points if you're providing up 50% or more in match funds. So if you're applying for $300,000, that would be $300,000. Now, match does not have to be cash. It can be in-kind resources, such as if you have, let's say your community has a land bank authority and you're going to work with the land bank to develop on those properties, and you're going to be purchasing it for $1 or something. The land value of that property would count towards your match. You can also waive the contracting permitting fees for these houses. That could be a source of match funds. You could devote staff time to this and account for the value of that time, and that could count as match. So if you need some help determining whether some of the things that you're doing would count as matched, we would be happy to help you figure that out before the application is due. And then we have an additional 3 bonus points for those communities that are applying and providing more production than the other applicants. So for example, if because you're providing match and because you're bringing a lot of resources to the table, our funds can go further and develop more housing, then we'll provide some bonus points to those communities that do that. But the financing and the number has to be reasonable. If you say you're going to develop a number of homes, but the math doesn't work and we don't think that it would be an affordable grant, then you wouldn't receive those match funds, even if the number of houses that you're going to be working on is higher than the other ones that have applied. So then in the application manual, you'll see that we have an application form that you fill out, and each section will have, well, not each section, but most of the sections have an attachment requirement. So these would be all the attachments that you would attach to your email. Just to highlight a couple of things that are on here, most of them are the same for each activity, but there's one difference, which is for the owner-occupied rehab, in the needs section, you would do the current housing conditions, and for the housing development applications, you would do your real estate development market analysis, which is where you would look at that map and fill out those questions. And then for the 2020 application, we're also asking you to attach a self-score form. One last thing I want to say is that nonprofits must also include their IRS nonprofit designation letter. The deadline is January 31st, so please note that that's different from last year. I think for the last 3 years, our deadline has been in December. So this year, we're extending it for 2 more months to give you enough time to go through your procurement process, and also because the feedback we've received from our grant administrators that work with us currently is that during the holidays, it's sometimes difficult to work with those local governments and get everything together. So we thought this would help. We are, I'll go over this a little bit in a later slide, but we are not extending the review process on our end. We will try to make awards the same time we did last year. So we're shortening up our review period. That's partly one of the changes, or several of the changes we've made to this year's application to enable the scoring to be a little bit easier on our end by putting in the self-score sheet, by using the mapping tool for some of that housing demographic information for the market analysis. Hopefully with some of those changes, we will be able to score your applications quickly and be able to put out awards. You are welcome to ask for a Word version of this application. The version that is on the website is in PDF format, so please request it by emailing the CHIP email address. You will have to submit your application and attachments by email, and please note that we have a 10 megabyte attachment limit for those emails. And so if you're looking at your stuff before you send it in, check to make sure that you're not going to be limited. We have a number of different options for you if this is going to be a problem, and that's in the manual in the submission section. You can either send multiple emails, you could arrange in advance to put your stuff in a Dropbox where we can then download it ourselves. But I would advise everyone to take a little bit of time, maybe a week or 2 before the application's due, to confirm that everything is going to work so that you're not worrying about it the day that it's due. And lastly, we require an application fee. This is a check that needs to be mailed to us by the deadline, and it's for $250, and all of the mailing details are in the application manual. So what happens next? So we are going to publish a clarification for the CHIP application manual by tomorrow. And we will publish that and have our communications team get the word out that it's there. Scoring will take, so you'll submit your application by January 31st, then we will score it in February and March. We aim to make our awards sometime in March. That's our goal this year. We know that many of you also apply for the CDBG funding and that you'll be working on your CDBG applications. We want to be mindful to give you the information that you need to make some critical decisions for the CDBG application in time to do so. That's why we're trying to stick to our March deadline for awards. We will do our training for awardees in April, and then we'll go through a contracting phase between April and July. The grant term is from August 1st of 2020 to July 31st of 2022. And you will have benchmarks that will be due by the July 31st, 2021, that will be required to continue your grant. So here is our contact information. I'm the second person here, Samantha Carvalho, and you're welcome to email me if you like. Our CHIP housing manager is Dean Nelson, and his email and phone number are on the top of the list. Your application submission should be sent not to either of our addresses, but to the CHIP address here, and then we have everything on our website below. So let me take some time now to answer any of your final questions before we wrap this up. It looks like I didn't get any additional questions. So I really appreciate all of you taking the time to listen to this. This will be recorded and will be put up on our website along with the clarifications. If you have any questions that come up, feel free to email us. We'd be happy to answer anything as you go along. We are sending out a survey after this. You should receive an email with a survey asking what you thought about the webinar. I'd really appreciate if you could send us your feedback so that we can improve what we do. And with that, I'm going to close everything, and thank you all so very much for attending.